And welcome back. In today's video, I'm joined by my buddy, Jim Black, who has been a mortgage advisor for, over 20 years, Jim? I can't remember how long
Yes,
it's been.
thanks, Jason, for having me on. It's been now 22 years, and it feels like yesterday I started.
Wow. Yeah, I remember that. It's crazy. Yeah, 22 years. Time flies. But in today's video, we're going to talk about if you already own a house, how do you buy a new home? So obviously there's some multiple options you guys have, of course. And so we want to kind of talk about those options in today's video because, of course, our landscape of our housing market is very, very challenging to say the least, whether you're looking to buy or sell a house right now due to rates increasing to around 8% right now, which is more or less a 23-year high. And on top of that, we have a lack of houses for sale in the resale market of existing houses, down by about 40% compared to 2019. So in today's video, I want to talk about the 4 options if you guys own a house and how do you buy a new property right now. So number 1 would be writing a contingent offer, in which you are writing an offer saying, hey, Mr. Seller, I'll buy your house if I can sell my existing house first. So you basically move your proceeds from the sale of your house into a new property. And Jim Black knows this as well. When you write a contingent offer, that is more or less a not very good terms that home sellers are looking for, because they're looking for someone who's going to write a clean offer. They're going to buy the house. It's not going to be contingent on what happens with the sale of the buyer's property. That's number 1, a contingent offer. Number 2 is using a bridge loan. Maybe Jim Black, you can talk about that very, very briefly here, what that looks like and how that's an option for buyers.
Sure, absolutely. So again, we know that if you have a contingent offer in this market, it's not a strong offer, especially with all the unknowns in today's world, right? Things are changing by the minute. People that are selling their houses most times just want to get out of their property and move on to the next life event that they have. So bridge loans effectively do the same thing. It's a quick close of escrow, but it is a very expensive option in most cases. So that bridge loan option really is not the best suited goal for anyone who needs financing down the road, because they'd have to do a bridge loan, which is basically a cross collateralized loan on their current property and new property. They'd have to pay fees one time. And then if they need an end loan, which means if they have financing needs after they sell their property that they own, they'll have to refinance again. So bridge loans.
So they refinance which property? That they refinance the property they just bought then, right?
Exactly. So there are 2 times transactions. Bridge loans work really well when a buyer is downsizing or has no need for end loan financing once they've sold their current house. So
Okay.
for example,
end loan meaning the financing on the property you're buying, correct?
Exactly. So maybe there's a senior who's living in a large home, wants to downsize properties. That's fantastic to do a bridge loan because they only need to do 1 transaction. But anytime there's financing involved after they sell their current house and have owned their new house to pay off their bridge loan, it gets more expensive. So there are better options available.
Yeah, I could see that as well. Yeah, because if you have to refinance after, that's a lot of transactions, and I'm sure there's probably fees involved in that. Okay, so that's option number 2. So we have writing a contingent offer, bridge loans, which sounds like it would not be a good option if you're looking to, or if you need a loan to buy your replacement property. It sounds like there's a lot of fees involved in that. Option number 3 would be to sell your property, move into a rental, whether it's a short-term or a long-term rental, and look for a house to buy after the fact. So you can write an offer that's not contingent on your selling your house because your house is already sold. Some people I'm seeing, or I have helped, they do move into a short-term rental. But as you guys all know, a short-term rental tends to be a little bit higher of a rental price compared to a long-term rental. On top of that, you have to move twice. And my wife and I, as Jim knows, a year and a half ago, we moved with 2 young kids. My wife was 9 months pregnant. So not only the stress, the time, but also the cost too, as well. We've moved quite a bit over the past several years, but the cost involved in getting a mover nowadays, it's so much more expensive than it used to be. I know everything's more expensive, right? But so that's option number 3. You sell, move into a short-term rental, then you place an offer where you don't have that contingency in place to sell your house, right?
That's correct. And then option, I'll give you some real life examples. I had one client that I helped buy before they sold another property that they'd gone through a previous experience where they had to move 10 times to different Airbnbs before they found the property that they're going to buy. So right now with tight inventory, it's not advisable to sell before you figure out where you're going to live. So a lot of people are
Mm,
holding on to lower interest rate mortgages,
yeah.
and the only reason that they want to sell is for a life event or for a once in a lifetime opportunity to move to a home that they never thought was going to come on the market. So a lot of times people are going to wait till they find that property that they want to buy, and then they're trapped figuring out, oh my gosh,
Mm.
my equity and my down payment are all in my house. Do I qualify to be able to buy before I sell? And traditionally in the past, people would sell first and then go look. And in this marketplace, that's not advisable. Again, for the reasons Jason mentioned, the stress, the moving, the double move. And in my example, someone had to move every week for 10 weeks. I
So
guess
what they do with all their furniture? They sell it or they put it in storage on top of that?
when they told me that, I just said, I'm not going to ask any more questions. And
Yeah.
in their example, they're like, Jim, we're moving forward with your solution because we're not doing that ever again. So I said,
Wow.
no problem. But yeah, it was not a fun process. I'm sure they left things along the way at each house. Like, I will
Yeah.
leave things as I move for sure.
Yeah, I mean, I was just thinking about that because you move into a short-term rental, often the times those are already furnished. So on top of doing paying for two movers or at least two moving trucks at the very least, you probably are gonna have to pay for storage as well, unless you're moving to a vacant property, which you're not gonna see
And
for
what
a
if you
short.
have kids that are in certain schools? What if you have animals? What if you have special needs
Mhm.
people that, maybe someone
Yeah.
can't go upstairs or down, there's a lot of moving parts there. So that's not really an advisable way. Unless you can live with your parents or in-laws, or maybe not in-laws, maybe parents.
All right. So those are three main options, and those kind of like the ones that people are most part are looking at, whether based on their scenario, what's best for them. But you have a different tool or product as well that I also want you to share as well to about a fourth option for people who already own a house but they want to buy for whatever reason.
Absolutely. So a lot of people, again, when they go down the path of finding this property that they didn't think was going to be on the market, they have to hustle really hard to get things in order and basically align all the stars to make something happen. Well, this product that we have available called Calque, that's spelled CALQUE, sorry, this way, is a program that's known as the trade-in mortgage. Calque is a partner to homeowners, a partner to real estate professionals, and a partner to your favorite local lender to help you be able to take the equity from your current property to buy another property and then have time to decide what you want to do with your current property. So a lot of people get into a stressful situation of doing a quick close of escrow. They don't know if their house is ready to be sold or not. They don't know what they want to do with their property. Calc solves all those problems, and they are not a competitor to your real estate professional or your lender. They're partners to everyone that you trust already, that you work with now or have worked in the past. And what Calc does is they offer a purchase price guarantee on the departing residence or your current property that allows you to buy your next property with confidence and only have to count one payment against your qualifying ratios. That's very important because a lot of families cannot afford the payment on both properties from an underwriting guideline and loan approval perspective.
Can you talk about that? So if without Calc, let's just say this is gonna be a learning process for me. I'm sure a lot of people who are watching this video probably are learning like how does that work when you have a mortgage on your current property? If you buy a new one, then how does it work? So without Calc, maybe you can explain from a mortgage advisor underwriting perspective what that looks like and what they look at versus using a product like Calc, for example, and how that benefits a buyer right now.
Absolutely. So traditionally, when you buy another property that and you own your current property, if you don't have it rented out or if you don't have it in contract to sell, we have to qualify both properties against your debt to income ratios. Debt to income ratios are based upon your gross income number And you can normally go up to about 43% of that number. You can imagine if you have a property that you own and you're comfortable with that payment now, but then have to add in a whole nother payment, that may push you above that 43% debt to income barrier that does not allow you to be pre-approved or approved on your financing you're looking to get. That's the issue a lot of families have, is that they have a lot of equity, but they have to count their current payment and the new payment to qualify to move.
Okay. So the underwriter's looking at what's your current mortgage payment now on the property you want to sell eventually. On top of that, they look at your payment of your new property that you're going to buy and add those two together. And that goes against your debt to income ratio, you're saying.
Exactly right. And
All right.
Calque, on the other hand, Calque actually alleviates the pressure of qualifying for both, because we've given our client a purchase price guarantee on their current property, which allows the underwriter to only count their new property towards their debt to income ratios.
Yeah.
So we give a purchase price guarantee, which is good for up to 150 days. This gives someone peace of mind that they have assurance that their property could sell because they're in contract with the purchase price guarantee, but that we encourage them to get the top dollar and highest use of their equity and assets by working with local real estate professionals that can do a much better job than any national company. I don't care what company it is out there. We've seen companies like Open Door and Orchard and Homelight have issues with the fact that they don't know the local markets as well as the local real estate professionals. So I don't know if it's sunny on one side of the street or the other. I don't know if this school district is better than the other. I don't know if the walkability or the closest coffee shop is 10 feet away or 2 miles away. Those are all local things that are important for local real estate professionals like you to really get in front of clients to make sure that they know all the features of the property that they're selling.
Okay. So this purchase price guarantee is more or less like a written offer for these people who own the house. And because of this purchase price guarantee, the lender, the lender, whatever the person wants to hire, that lender will not use the mortgage payment of your current home in order to qualify you for your new home purchase, correct?
That is correct. So
All
again,
right.
Calque
Unless
is a
you
partner.
plan to obviously move out and you have a lease agreement signed with a renter, then obviously that obviously changes. But we're
And
talking
even
about
at
selling a
that,
house and moving.
even at that, Jason, sometimes if you don't have experience being a landlord, it doesn't necessarily matter if you have that lease and rent. It may, depending on the type of loan you get, you may not be able to even use that to help you offset the new payments.
Yeah, and I
So
know
we
that
like
a
to
lot
look
of
at
lenders too only allow you to use like 75% of your income, your lease income that you would get as well.
exactly. So this
Right.
is a program. Calque is a partner again to local real estate and lending partners in your community. This product has also been approved with the government in terms of the guidelines that are offered through Fannie Mae. And Fannie Mae is still the largest provider of mortgages for conventional loans in the country. So it does fit a lot of owner occupied primary residence loan scenarios that we run across. And that's really the wheelhouse that we're focused on. We want people to move with life events. We want them to have the flexibility to choose Calque as a great option. We don't want them to have to sell their house in one day and feel like they'd made a bad decision. Calque offers a 150-day purchase price guarantee. So you may discover through the process of having moved that you decide to keep your property and rent it out. You may decide that there's a better offer to allow your family members to move in or sell the property. In any of those situations, Calque understands and is a partner to you. And there is a small fee involved to use Calque. It's a charge of 1% of the purchase price guarantee offer. So let's say Calque offers you $700,000 in your property. The cost would be $7,000 plus a $2,000 processing fee. That offer is good for 150 days. So guess what? Maybe the market moves up or down in that time frame. Calque could be your assurance to allow you to have time to make a better decision for you and your family. because you've
Interesting.
probably jumped into an escrow so quickly or a new purchase so quickly because maybe the opportunity was there in a short window of time. Maybe you had a job relocation, had to move. Maybe you had twins unexpectedly. Well, at least twins, you'd have 9 months to hopefully be prepared. But but you never know, right? Things can
Yeah.
happen. Life happens. So
Yeah. All
that's
right.
why we love Calque and the product I stand behind. And I'm actually a mortgage lender. So what I love about Calque is Calque partners with me on every transaction I do. They're not getting in the way. They're not a licensed lending company. They're not a licensed real estate company. So I know that they have the best interest of the consumer in mind because they're not competing to offer the best solutions that a mortgage or a real estate professional can offer.
Yeah, the first thing that comes to mind is an iBuyer. You also could sell your house to an iBuyer, for example, but I mean, are you going to get the best price on your home if the iBuyer just wants to resell your home 1 or 2 months later, right? So obviously they want to try to buy your house for the least amount they can so they can maximize their profit on the back end, right?
Yeah, you won't
So it's
see us.
interesting.
You won't see us flipping signs on the side of the road. I'll buy your house for cash. That doesn't work in this market because a lot of people. Another phenomenon that people are running into is the fact that they may have a 3.5% interest rate, and with rates being 7 to 8% today, they may decide to keep that property as a rental property, but they may not know right away. They may need a couple months to figure out what's best for them. So Calc allows them time to figure that out with assurance that they have a purchase price guarantee price that no matter what happens, it's honored and backed by tens of millions of dollars of reserves that Calc has. Calc
Okay.
is a very respected company. The leadership behind Calc has had decades of experience, and it's a great company to look into for any of your trade-in mortgage needs.
That's great. So this is someone who wants to sell their property but wants to buy a new one, looking for a way to do that rather than making like two moves or doing a more expensive bridge loan, for example. Maybe really quick, you can kind of walk us through the process about how the actual process actually works. If you're a buyer, you're working with Calc, how do you write an offer right away? How's that look when you sell your house? Maybe you can just talk about that process with the.
Sure. There are 5 easy steps. First one is you submit an application through our website, tradeinmortgage.com. You put your address in. We have some technology, some proprietary technology that allows us to give you a purchase price guarantee offer within 24 hours, which is state of the art, unheard of. That purchase price guarantee offer is good for 30 days. So you can decide to look at all the options with your lender and your real estate professional or your family, your CPA, financial planner, whoever it might be. And then you accept the offer. The offer then is good for 150 days, and you can decide to keep it or not. If you decide to keep the offer on the purchase price guarantee, there's a final walkthrough inspection that's done to make sure that the property is in the same shape it was before, when you got into contract with the purchase price guarantee. Make sure it still has a kitchen and a roof and appliances and, all the normal stuff. And then the house is sold to Calc as a 150-day guarantee assurance. But
I think
again,
it's important to note here, though, the Calc doesn't really want to do that. I mean, they
yeah,
want
Calc
to.
wants to be your partner in helping you find the
Exactly
best
right.
solution to sell. We do not want to take any business from local real estate professionals. I would say 1 in about 100 actually go through the process of us doing the whole transaction
Okay, yeah.
because there are so many variables that we want to make sure we protect the local community that gives better advice than, again, a national company. But we do
Yeah,
operate. Yeah.
and usually you can sell your home on the open market, you get a better price. And so I want to kind of hammer the fact that Calc is not in the business of buying your house and then trying to resell it later. They would rather this is more like a product to allow you to buy a property before selling your current home. So they don't really
We are
want
a,
to
we are
buy
a,
your house. I just want to throw that out right away. So yeah, go
and
ahead.
that's a good thing to be aware of. There's fintech companies and prop tech companies. Fin stands for financial. We're a financial product.
Hmm.
Prop tech are companies like Zillow and other company, Redfin and other companies like that, that are property specific, trying to get transactions based upon properties. So we are a
Mhm.
fintech company geared and built to support the local community to allow them to have more options to decide to buy before they sell and know that they have options. And again, everyone's situation is completely unique and every scenario is not the same. So I love this tool for my business because it allows me to help people with a customized approach to making sure that we've looked at what's important to them, not just a one size fits all product.
Yeah, makes perfect sense. Okay, so then someone goes on to was it tradeandmortgage.com? Is that right?
Tradeandmortgage.com.
Okay. Then you would
And
apply, then you accept it, and then what happens next after that?
yep,
Just kind of give people
within 24 hours, you get a response back from our customer service team. We're all based here in the United States in each area code, or I should say time zone. Sorry, not zip code. That would be a lot of
zip
employees.
code. Holy.
Every time zone, so we can be reached anytime that's convenient for the consumer, even on Saturdays if need be, because that's sometimes when people make decisions. We then offer a purchase price guarantee. That contract is good for 30 days to execute it. If someone executes the contract, they then have 150 days to have the assurance of the purchase price guarantee and decide if they want to end up selling the property or if they want to refinance it or rent it out or do something else. But our contract is a valid, verified contract. We open escrow. It's a fully vetted purchase contract. So we are there to help support our communities.
Okay. So then once you have this purchase price guarantee, it allows you to place an offer on your replacement property without using your current payment of your current home, right? So that allows the person to, once they have this contract in hand, work with their local real estate agent and lender and can place an offer on a replacement property without worrying about selling your property first or also using your current payment as well in order to qualify for you for a new property, right?
Absolutely right. And again, this is a phenomenon that's going to be here for a long time, purely because of supply and demand. I don't think we're going to see a lot of people be really excited to move from a 3% rate to an 8% rate. So it's going to be one of these things where it's really geared around life events. Again, job relocation, family needs, life events, anything that happens in that regards. I probably get 15 to 20 of these requests a month. And it's fun and it's exciting because I get to help someone with a very potentially complicated situation, and I can simplify it with a great product like Calque.
Yeah, that's pretty awesome. I mean, going through the move with a pregnant wife, a less than a 2-year-old at a time, and the time and stress and money involved in moving twice, because like you said, the inventory levels are so low right now. So, placing an offer that's looking for a house, a replacement property can be really challenging and it might take a lot of time. And before we started recording this video, I looked up and saw that there's actually just under 3.2 million existing home sales so far this year on a national level. That's January through September this year, according to NAR. So just under 3.2 million home sales. And I talk about this on the channel quite a bit because we have all these headwinds that home buyers are facing right now, especially regarding high home prices and rates. And because of that, demand is decreasing. And the current sales pace for September is at a 13-year low based on stats from NAR. So we're seeing a lack of transactions, but this means that we are still seeing in transactions, nearly 3.2 million home sales. So like you said, most of the people that are buying or selling right now are doing that due to life events, a death, divorce, relocation. I'm seeing people who want to buy or move because they just got married. They want to raise a family. They have a small condo, for example, or they want to move from a more expensive area, such as the San Francisco Bay Area, to Sacramento or Utah, or Arizona, et cetera. So even though there's a huge pullback in demand, people are still buying and selling a house. And so I found this really interesting to find, Calque's product here to kind of help people around. So I really appreciate your time, Jim Black.
Thank you so much. And again, life happens, right? Events happen in life, and those aren't specific if rates are 8% or 2%. They're about your needs and your goals. And I think if you become a advisor and you're there for the important decisions people make, you're always valuable. And Jason, I really appreciate all the value you give your audience and your viewers because it is some of the best out there. And I learn every day listening to one of my dear buddies talk on YouTube channel. I never would have thought that back in high school that we'd be
Oh
doing
man.
this today. So I'm honored to be on your podcast and your video. And thank you for your time. And again, you're one of the best in the business, and people should count on Jason for anything that they need around real estate, because he is a great resource. And thank you again for your time on your show.
Yeah, absolutely. Thanks, Jim. I appreciate that, bud. And you've helped me with my own transactions in the past as well, being a mortgage advisor. So anyone who's interested in learning more about Calque, I'll provide a link in the video description below. And again, Jim, thank you so much for joining me in today's video. And thank you very much for everyone who's watching today's video. Like and subscribe, and we'll see you on the next video.